If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief Friday edition. So today, I think we're going to be up and running with a little bit of No Donation Friday. We're going to talk some psychology on how you can carry yourself during today's session and maybe walk away with a little bit of momentum. We're also going to cover the Iran war. We've had a break in the Iran war, breaking news. Basically, as we come on the air out of the Trump administration, we've got some Iran predictions. We're going to look at the prediction markets as well. Strait of Hormuz in jeopardy. So it looks to me like I've got the microphone issues fixed from yesterday, and I feel like we're going to have a decent audio day. So good to see everybody back in the trading room. I'm looking forward to today's stream. It should be a lot of fun. So basically what we've got going here is we've got a dollar. We've got a U.S. dollar that's sort of, I won't say in flux, but it's definitely changing. It's flat today, but it's been really, really strong. We've got a Euro USD trade that looked pretty good earlier. We had a US dollar Japanese yen trade that looked pretty good earlier. And we also had an Australian dollar trade that didn't really go that well. And what the lesson here is this: when you bet against all of the dollars, if you're trading a dollar pair, if you're trading $5 pairs, if you're trading all the majors at once, then you've definitely got a situation where you just don't exactly know what's going to happen to your individual pair because it all is predicated upon the dollar. All right, it says dark screen. I guess we're still fighting with it. I think I'm up and running. I mean, I'm showing that I'm on. Maybe it's just the lights are turned down a little bit. That could be as well. It just depends on probably where you're at. But dark screen, I don't know. Jason Maxon, good to see you. Welcome. If we're running a dark screen, we can always turn the light up. I mean, that's probably about as high as I can turn the lights up and not die in my own eyes. But I don't know. That's pretty much what we're going to go with today. So thank you for the feedback, Bobby Bob. Sure appreciate it. Jason, good to see you out there in YouTube land. All right, everybody, let's go ahead and get rolling here and see exactly. That's just too bright for me. We're going to have to live with the dark screen. Sorry. If the lights are too bright, I can't see the screens. If I can't see the screens, I can't really even see price action. So good to see everybody back. All right, guys, let's go ahead and get started. I do want to talk some Iran war right now because it is breaking as we speak. Trump says Iran violated ceasefire with drone attacks on the Strait of Hormuz ships. We had some drone attacks that came across the board last night during the U.S. overnight session, and I just think that we're in a situation where anything can happen. Absolutely anything can happen with regards to this Strait of Hormuz. You can see after attacking cargo ship, Iran presses its claim to authority over the strait. U.S.-Iran latest slow progress on peace deal as Iran strikes ship in the Strait of Hormuz. This just broke. Trump accused Iran of violating the ceasefire agreement by launching attack drones at ships on Strait of Hormuz. One of those drones struck a cargo ship off the coast of Oman on Thursday. So we're really looking at what could potentially happen here. I think that are they going to call off the MOU? Is the MOU in jeopardy? I don't know. I don't see that kind of price action out of U.S. oil. Right now, U.S. oil is right around $69. So to me, we're still filling that gap. I don't necessarily see any real prima facie evidence in the markets that this war is going to be resumed anytime soon. So we're going to see exactly how this develops over the weekend. You can see right here, Trump, Islamic Republic of Iran shot at least 4 one-way attack drones at ships traversing the Strait of Hormuz. That's tough. Let's see. One of the drones solidly hit the upper deck of the range, upper deck of a large and very expensive cargo-carrying ship, the president wrote. Damage was done, but the ship was able to proceed on its way. We knocked down 3 other drones. Obviously, this is a foolish violation of our ceasefire agreement. So there we have it. We may be in a situation where we don't really know. We don't really know what's going to happen here. I think that we could be in an interesting position going into the weekend. It's going to take a lot for them to call off this MOU. It's going to take a lot for them to call off this ceasefire. So be ready for anything. But it's one of those things where prepare for the worst. But I don't really believe that you're going to see the ceasefire be annulled over just a few sporadic attacks. However, if this becomes a trend, if you do start to see this happen every single day, then you are going to be in a position where we've got to start pricing the resumption of the war. So War Friday, unfortunately, I'm going to talk a little bit about our prognostications and projections for the rest of this thing as we roll forward in time. But I got to tell you that it's going to take a lot. I mean, if they're going to take drone attacks on ships going through the Strait of Hormuz, they're probably going to put up with a lot. Tina Jing, good to see you. Tina, welcome. Oh no, not again. Yeah, I mean, I think that we're in this situation where anything can happen. I'm watching it closely, but my gut says it's going to take a lot for the United States to resume the war against Iran. Remember those oil numbers I showed you on Wednesday? That's the big reason why. All right, let's go ahead and get into a little bit of SpaceX IPO. This is probably the last day for this goofy slide, but I like it. The Elon Musk always makes me laugh, the goofy Musk. But SpaceX in an interesting position as well. Trade update, U.S., 150 in play for SpaceX. We sort of wrote up this trade idea that essentially said we wanted to sell beneath this low. This is a 30-minute chart. I drew this out yesterday. It was sort of a descending wedge pattern on a real short time frame, a 30-minute time frame. And that low right there is 147.10, somewhere in that zone. I was looking to sell underneath 147. I think that was a pretty good play to get in on that, on what could potentially be a major washout of retail longs. For right this minute, we've broken to the top side. We have protected that 150 level yet again. So, in one respect, it was a pretty good trade because we're just waiting for us to trade beneath 47. Then essentially we're going short down to 41. I really see that as a high probability trade that you could do on maybe a CFD, that SPCX CFD over at Switch. But for right this minute, this descending triangle, we broke. You can see we broke. Now, typically, you're going to favor the downside of these triangles like this. Inverted pennants, I've heard it called that before. Bearish flags, I've heard it called that before. But essentially what it is it's price compressing in a bearish formation right around your key level. And the key level right here is 150, and that's absolutely imperative that we understand that 150 is where the game's being played right now. So we're back up to 157. Could we have gone long down there? Yeah, probably. Was that a bit short-sighted on my part? Yeah, probably. But in my eyes, sometimes it's better just to stick with what you know. We have a pretty good idea that when we wash out that 147 level, the bids, that buy-side supply that we've talked a lot about, it's not going to be there. And if it's not there, you're probably going to fall back down into this vacuum, which I believe eventually will be filled. We're at 157 right now, though. 38%, sort of this epic move, is going to be up around 177, so still very bullish on the daily time frame. I do believe that we may get a test of 175 maybe, but I don't know that it's coming anytime soon. There's so much meat on the bone when we talk about SpaceX. I feel like I'm waiting for the next big market driver. I was talking with some folks earlier today, and the question came up, say, hey, when's the next SpaceX spaceship launch? When's the next launch? Are we going to see? Are we going to see anything regarding? Let me put it this way: if the next rocket blows up on the pad, what happens to the markets? Do the markets go down for SpaceX? Do they go up for SpaceX? We're curious about that. So we may actually carry the next SpaceX rocket launch live, especially if it's during market hours, just to see what the market does as SpaceX is sending hardware into actual outer space. I can't even believe we're talking about this with a stock. It still blows me away. I hate to date myself like that. Maybe I'm not on the cutting edge, but that's okay. I don't mind not being on the cutting edge. We stick to what we know, and we can do pretty well when we just stay within, I won't say within our comfort zone, but when we stick to our guns and we stick with our strategies and we execute the way we can execute, we can do very well on the markets doing that. That U.S. oil trade was prima facie evidence of that. All right, here's a trade idea that I put out the other day. Gold plunges macro support zone in view. Pretty dramatic graphic. The actual trade idea is not nearly that enticing, but it's not too bad. You're looking right down there, right around 37, 10.09, somewhere in there. Check out our trade ideas over in the How to Trade trading room, or on X at @ShadenV_trader, or on LinkedIn underneath How to Trade on LinkedIn, and you can get all those trade ideas as they're put out pretty much every day. Monthly levels. Been a big bearish month for gold, no question about it. The stronger U.S. dollar has really put the impetus on it hasn't put the impetus on, I'm just mixing my words up today. It's really it's put the impetus on selling for gold, but what it is doing is it's really bringing into question your metals markets. And the reason why is because as the dollar goes up, things like metal, crude oil, commodities, they go down. Why? Because the dollar's worth more. All right, your dollar will buy you more of that commodity. Dollar goes down, commodities go up. Dollar goes up, commodities go down. That's just basic pricing. So just understand that relationship, and it'll shed a little bit of light on what's happening here in the metals markets. But I tell you what, I don't hear those gold bugs out there anymore. I don't hear the folks out there that were beating the drum for silver saying, "Oh, silver's the best. Silver's the best investment of all time," and it was amazing. But let's be honest, silver's trading about $60 right now, and it was trading 110 at one point, 115. So it's absolutely just brutal. So when we start talking about what exactly the stronger dollar's doing, it's killing metals. No question about it. So do we want to buy gold from right here? I have no interest in buying gold from right here. You can see our macro zone that we've played seemingly forever. I don't want to go over it again. But our key level down here, this bid level is right around 37.06, maybe 37.10, maybe even all the way up to 37.25. We've got the monthly Bollinger midpoint down there right around 37.03. We've got 62%, 37.06. And if we do take this area out, If this area goes 37, we trade beneath that. We weren't too far away. We were trading 39s, low 39s yesterday or 2 days ago. We were here, right? We were coming off. If that goes, then what's going to come into play more than likely? That's the end of the long-term bullish trend for gold. That's the line in the sand. We trade down in here. We are now in rotation. Now, the beauty of this, if you guys remember this value area, this pennant down here, sort of in the vicinity of 7,800, 78% down there, that's where the institutional bidders are going to step up in a big, big, big way. That's where I would probably say, listen, if you want to take a position in gold, you can probably get away with it from there. But the gold market's changing dramatically. We're not seeing the bids hit gold like they have in years past and earlier this year. I mean, remember January? It was just a madhouse. I mean, gold was up every single day, up. And now the war started. Money's coming, the interest is going back into the U.S. dollar. Those valuations are up, metals are down. Where can we trade from? I have no trades on the board right here. I'm going to look at gold futures here probably towards the end of the stream. Actually, let's just do it right now and see if we can get a trade. But this is spot gold. That's the area I'm looking at hard. 37.10 to 37.25, somewhere down in there. Robust downside support. Right now, we're at 4,000. All right, maybe we're not down as close as we need to be to consider this trade, but I would be watching this probably, I mean, not for the rest of the summer, but definitely for the next couple of weeks. As far as gold, we have rolled to August gold futures. August gold futures, I don't know if anybody in here trades full-size gold futures. It's one of my bread and butter markets. Absolutely love it. I trade it, in a myriad of different ways, but this is one that we've been really featuring lately over the last month or so, these TPO charts, time price offering, market profile. We're going to go over that NASDAQ trade we took yesterday. Wasn't bad, that B formation. Today, we don't really have anything. I mean, we have something, but I don't care for it. I don't like it. I don't feel deeply that it's a good trade. Your point of control here for the United States session is going to be right there, right around 4,065, right? That zone, that's where we've done a majority of the business. Well, we haven't done business down there since really the pre-U.S. Open. The U.S. Open has been thin. Now, this is August gold futures. We have rolled to Augie. All right, we have rolled to Augie. Now, this is big because the next contract that we're going to be trading for gold is going to be December. So we're trading Augie, then we're going to go to Dees. That's typically how gold works. Gold's a weird one. It's a weird contract. It's not like crude oil where we go January, February, March, April, May. Sometimes the rollover varies. There are a lot of those contracts are still on the board, but they don't get any volume. Augie's a big one. August is pretty much going to cover our summer months in gold futures. And then we go to Dees in December, and Dees futures, absolutely huge because that's where the institutions are going to either be hedging their long-term risk or look to unwind some of their positions or do some profit taking. December gold is the one you want to trade for sure, but that's not going to happen for a couple of months. Right now we're trading Augie. So we've got August gold. You see right here, nice point of control down at 40.65. It just isn't, it doesn't entice me at all because I don't think we're going to get there, number one. But number two, what can we really do about today's price action? I mean, I could put all sorts of indicators on there. I could throw Fibonacci's on there. The big thing you need to realize is the value area that was developed sort of during that overnight, sort of down in here. That's where the majority of the business is done. It's been a thin U.S. session for gold. I don't think I'd be involved. I really don't. If you wanted to buy the point of control late in the day, maybe 4,066. But to be brutally honest with you, these are COMEX gold futures traded on the CME group. This volume's evaporating as we speak. So you definitely don't want to get too involved or too wrapped up in all this stuff because point of controls, market profiles are great. We nailed one yesterday. I'll show you that in a second. But when there's not that much action in there, I would steer clear of this for today. Friday session, come back and be ready to trade. We'll be watching our macro levels, be ready to trade Monday. In Q, this is going to be the NASDAQ. This is September futures. Remember what happened yesterday? We talked about that B formation. Let me sort of redraw it again. You can review yesterday's stream if you wanted, but it was sort of a B formation, right? Well, this action right here, we took the trade right from the point of control. We actually went up and filled that thing in right on the close. After the close, price evaporated, came right off. We sort of challenged it again, but then price came off in a big way. So these are intraday trades. You don't take positions on market profile. These are scalp trades. You do these during the day. If you're interested in maybe that trade that we placed yesterday, be sure to go back and check out the live stream. But we really did. We bounced right off of that point of control. Let's get rid of these drawings. You bounced right off of this point of control. rallied up right into our gap that we had identified and sort of filled it in before the market really fell away. So while a lot of people were waiting for that big rush at the end of the day, theoretically, you did get it. It just didn't really break towards that upper echelon of pricing for yesterday's session. Now, what's going on for today? Today, a lot different. A lot different. Value area high, value area low. The overnight point of control is down here. U.S. session is right here, right? We're establishing that right in there. What can we say about this NASDAQ? Are we bullish or are we bearish? Man, we're neither. We are neither. I would, if I'm trading that NQ futures right now, and this is September, we're not trading September NQ futures. I don't think you want any part of this chart. I think it's way too difficult. We'll circle back around and maybe get a WTI trade in a little bit later on, crude oil. But as far as NASDAQ futures point of control, I'm not really too blown away with it. E-mini S&P 500, the world's largest futures contract, same basic formation. You'll notice that we didn't have a B formation yesterday. Didn't have it. We had just more of a normal distribution. Market sort of fell away, and then we broke. Overnight point of controls down here. Value area is down here. So we're still trading above value, but really the business has been on the upper side of the daily range. It just isn't any good, in my view. I mean, maybe we could do something like this with the Fibonacci. Spike low there, spike high there. Still, I mean, I would love it if we get a 38% maybe right on the point of control or something like that. To me, really difficult to trade that S&P 500 like this. In this type of conditions. It just feels to me like it's dirty. It's rotating. It just isn't much fun. I like that fun. I don't like to sit around and hope my trades come in. I like to watch them cash and then laugh after they do. But that's my personality, and we don't always win. Some of the strategies we use are, they produce mixed results. This one right here is another one. We highlighted this trade yesterday. Australian dollar, US dollar, 4-hour chart. This is on your MT5 platform, your 9 EMA strategy. It doesn't really get much better to me than the Forex and the 4-hour chart. I like the 920 crossover better. I really do. I mean, I've watched this 9 EMA. We've worked with it a lot. There's a time and a place to trade it. Trending markets are not one of them. Essentially, what you're trying to do with a 4-hour chart on this Aussie, we're trying to pick a bottom. I'm not real big on picking bottoms. I'm not real excited about, okay, here's basically your big macro trend on a 4-hour. The market flattens out and just turns into just absolute junk. That's a picket fence. That's a spike low, spike high, spike low, spike high, spike low, spike high. That means the market's not going anywhere. It looks like a barcode. I don't know I wish I had a barcode. I should get a great big one and print it out for everybody, but it's like a barcode. It's like that. It's crazy. It's just up, down, up, down, up, down. And it doesn't make any sense. And when you start trading barcode markets, you start losing a lot of money. And when you start losing a lot of money, you're saying, why am I trading this garbage? Now, from my point of view, we took a shot yesterday. It was a bid right there. We bid 4-hour chart, Australian dollar, US dollar. We could have easily stopped ourselves out right there. We got nailed. Maybe down beneath here, we would got nailed as well. The one thing that I want to point out, if your stop loss is right there, you probably got hit. Take a look at the low of this bar. The low of this bar is right around what? 68.75. I believe that's right. Excuse me, I should wear my glasses, right? 68.75. So what's the difference between putting your stop just a few pips below this swing low, which theoretically I don't mind, 68.78. Do I want to stop myself out up above 75? No. Quarter handles there. We're only talking about risking maybe another 5 pips to give myself about a pip cushion beneath the 75, the 3/4 handle. So your stop loss locations, you have options. Number one, you could have put it right beneath the trigger bar, taken the small loss, stopped yourself out at about 68.89. That's fine. You could have went beneath the swing low, somewhere right in there, which would have been, say, 68.78, 68.77. This price action right here shows you bounced right off. I mean, absolutely right off of that 75-ish. Maybe somewhere down in there would have been a little bit better beneath the 3/4 handle. I think that if you're only talking about a few pips to buy that added insurance, I think you do it. So what I would recommend highly is being smart, being astute with your stop loss management. Let's say you were going to take a trade like this and your stop out point was going to be, at like 60, 69.02. Probably just put another 4 or 5 pips on it. Give yourself a chance for 69 to be the point of no return for you. And you may find that over time that those areas really help. Maybe not to go up and win your trade, but they could maybe get you out of one better at a better location. Maybe 69 holds up perfect and you get a nice bounce and you don't exactly have to stay in there for the profit target, but maybe you just take half of your loss. You see things like that consistently happen. You really do. And that would be a situation where if I was trading large sums of money, I would want my trade to have every chance to succeed. And that means we got to have a structured way in and out of the market. That means we need to be trading at the right time, and we have to be trading the right products, of course. But also those stop loss locations, your stop loss needs to be legit. It can't be a soft stop. You need to know where to get out. This right in here, this was hard. If you got stopped out of that trade, there's not much you could really do. You may have been able to ride it out. Price action was slow. If you rode it out, you're pretty much back up to break even. But what are your odds of it really winning? Depends on next week's trade and probably our macro market drivers. So there's a lot that goes into stop loss location. Get good at it, I guess, is what I would say. You have a finite stop loss on this US dollar Japanese yen trade that we talked about yesterday. It hasn't really done much. Interesting, though. Definitely an interesting trade. This is one that we put on live. I said, listen, if you guys want to go short right in front of 162, let's do it. 161.95. We just sent them short right there at 74. I said, go ahead, go for it. Well, take a look at our trade. Our trade was a 1-to-1 trade. We knew exactly where we had to get out at. Now, this is what I mean by not being short-sighted with your stop losses. If you've got 162 that's big, you've sort of got your swing high right there at 161.95. A lot of traders are going to want to stop themselves out at like 97, 98. Why? Give yourself the benefit of the doubt. Let price sort itself out at 162. Use 162 as an asset. You could get a bunch of sellers step in at 161.99 that might save your bacon. So don't just get married to market structure and, okay, I'm going to put it right above that swing high because everybody can see it. Everybody knows. Think about the bigger numbers, the broader picture, the key levels. That can really help you stay in these trades. Right here, our stop loss is up there at 162.09. We're going to let it sort of work itself out at 162. In my personal opinion, once we break 162, you're probably going to run to 162.25, which is fine. But if you don't, maybe you go to 162.01 and then pull back down to your break-even point. Maybe a ton of sellers come in. It is possible. Is it probable? Probably not, but it's possible. One of the bad things about this trade, and one of the things that was extremely frustrating, and this is one that we executed in real time yesterday, was you could see what happened. My profit target's down here, and we're just knocking on the door. Your low right there is 161.53, and we're down there at 161.49. Should our profit target be at 161.49? That means 161.50 has to get taken out for me to win. Maybe we were better at 52, 53, something like that. Don't discount the importance of numbers, especially in markets like the dollar yen. We just haven't traded these figures very long. We really are in rarefied air. We're talking about all-time highs, 162s. I believe it's all-time highs. Maybe it isn't, but I believe that's pretty much the high watermark for the dollar yen. I don't know, guys. So what do you do with this trade now? A couple of options. It was right on the doorstep of getting paid. You could do a lot of things. You could extend. You could try to do something like that and just look for a bigger move going into next week's trade and leave it static and see what happens. You could do that. You could move this stop loss to break even. You could do that, or you could just scratch it, or you could leave the original trade. Whatever you want to do. It's dealer's choice. It really is. It's up to the trader. But that type of situation right there is frustrating because, the market is just 3 pips away, 2 pips away from where you need it to go to get paid. And that's sort of a 5 pips. That really is the challenge. 4 pips. That really is the challenge of trading. No question about it. Just finishing these trades strong and being able to take those profits. And, I don't typically put small profit targets right under a key level like that. We lined it up in real time. If it follows through, it's great, but there is a teachable moment there. And the moment is you're fighting a macro trend, number one. It's a bullish trend, no question about it. What happened at the key level? They bid it. They didn't sell it. That's the difference between being a winner and a loser in a trade like this. And it should be your spidey senses, man. That should be your 6th or 7th sense. That's got to be it, because if it isn't it, you're going to struggle. You're going to struggle building profitable trades. You really are. You got to understand how the game's played and where these key levels are, when the key events are. And if you're not going to do anything else with the key levels, I mean, I wouldn't worry too much about them on the profit target side of it. If you're a winner, you're a winner. If you're a loser, but your stop losses, those key levels can really help you with stops. And, that's just sort of been my experience over the years. Maybe you can reflect some of those things in your trading. I don't know. Or just play a strategy. Play a 9 EMA, play a 5-8-13, play a 9-20. Euro USD, this is another one that we put in yesterday. This was a really nice trade off of a big-time zone. I mean, this is a big-time level. Like if you were going to bet, put a high leverage trade on, this is what you would do. Monthly chart, Euro USD, really just nice big run-up, compression for about the last year. Now we're testing the bottom end of this zone. Have things fundamentally changed? Yeah, they have fundamentally changed. The dollar's now sort of turning bullish for the first time in about a year. So now you're starting to see the situation where these majors are all playing in favor of the dollar. Well, that's fine. 38%, 135.54 was our entry. I entered, I believe, up at 62 because I was aggressive and wanted to get in. So you start taking a look at what has happened here to our trade. Well, I mean, there it is. You're still in the green. Not as much in the green. 114 was beautiful. We traded up above 114 all the way up there at about 114.34. At that point, I figured it was pretty much over. Thought you're probably going to get the follow through and go up and get your points, but that's not the way that trading works. This market has reversed, and now we're coming back down to that key level right beneath 114. If I was position trading this and thinking about holding it for another day or 2 days or 3 days or whatever, I would want to see a daily close above 114. If I got that, I'd feel pretty good about it. So something to think about there if you're still holding here. But if you're not and you're thinking, it's Friday, maybe you just take the money and leave. The beauty of this kind of trade is you can always hit it again next week if it does come our way, 113.50s. That's going to be pretty good scalping in there unless we see a major fundamental market driver change. So for me, the Euro USD, really like it. Love the trade. I thought it was a fantastic trade. One quick thing before we move on. We got a few fundamentals to cover here today. We're not going to spend a whole heck of a lot of time breaking down, the war. I kind of already did it. I'm just looking for new headlines right now. We are going to talk about some predictions of what could come next. And then we do have a little bit to talk about there in the University of Michigan Consumer Sentiment Index. And that's also going to be a very brief conversation. But this right here, Euro USD, still like it. Teachable moment. Okay, so all these trades we had going yesterday. Euro USD, I believe that might have been 2 days ago. So the Euro USD, what has to happen? The USD needs to start losing. US dollar, Japanese yen, what has to happen? USD needs to start losing. Australian dollar, USD, what has to happen? The USD has to start losing. That's called triple exposure. That's called triple exposure. If you're holding positions, and a lot of new traders do this, they say, okay, I'm going to take a long here in the Euro USD, and I'm going to go short here in the US dollar Japanese yen. Then I'm going to go long here in the Australian dollar USD. What are you really doing? You're just betting against the US dollar. If you're faced with that situation, now this doesn't really apply to intraday scalping as much, just because the price action is a little bit different from pair to pair to pair. Okay, that's fine and dandy. Or maybe there's a big event out. You want to capitalize on something coming out of the BOJ or something coming out of the ECB. That's fine. But if you're just taking a pure price action play, which is what we did this week with no real big market drivers out, and you're betting against the dollar in each one of those majors, that's called triple exposure. If the dollar strengthens, you're going to lose all three trades. Now, maybe you do, maybe you don't. Maybe the euro holds on a little better than the yen does. But by and large, everything you do is pegged, to the value of the U.S. dollar, especially in those Forex markets. So I wouldn't be afraid to pick up some cross pairs. I wouldn't be afraid to dive into something new. I mean, there's no rules saying that instead of trading the Aussie dollar, you can't just trade the Aussie CAD, something like that. Take a good look at the price action. It's a great pair, cross pair, true commodity dollar pair. There's price action here. There's good stuff here. What's happened this week? A little bit of a pullback. Do we have a key level in play? Yeah, maybe something like this. So what could we do? Sort of spike low, spike high. We've got our big macro level down there at 95. Of course, we would love to trade that. Is it there? No. Let's go to a daily chart. Maybe there's a way that we can get in on the action here. Okay, daily chart, what's going on? Well, nice big move over the past 5 days. Aussie CAD, why wouldn't there be? Oil sort of way down. Maybe I'm pull back sell there. Maybe I go pull back sell from 98.35. What that does is it sort of gives me a degree of insulation against the dollar. Even though dollars used to price gold, which is the Australian dollar, sort of hinges on gold, those metals markets. Canadian dollar, highly dependent on fossil fuels, and we still denominate the oil and things in the U.S. dollar. So you're kind of insulated there a little bit. You at least have a degree of separation as opposed to just trading the Aussie USD and then the USD Canadian dollar. So something to think about there. What I always recommend is if you have 4 or 5 pairs out there and you're saying, all right, what can I do? I'd say, well, they're all dependent on the dollar. You're looking at the majors. Now, if you're trading a 1 minute time frame, just go ahead and run your systems. I'm not saying anything against that. But you're looking at the Euro USD, you're looking at the dollar yen, you're looking at the USD or Great Britain pound USD. You're sitting there, you're looking at all this stuff going, okay, I'm going to take this, and this, and they all line up against the dollar. I always say pick your best one. Pick your best trade. Pick your best trade. I think the Euro USD, this one right here, probably of those 3 was the best. Hasn't, we had a decent price action. Hasn't quite produced. The Australian dollar was definitely the worst just because it lost. So definitely keep an eye on that stuff. I mean, those are all important things that over time, as a trader, you just sort of get experienced and you understand, hey, do I really want to be exposed to all things U.S. dollar? Well, maybe you do, maybe you don't. But just remember that concept of triple exposure. It's very important. Very, very important because that can dictate your success in a lot of different markets all at once. And we want to make the most of our money. We don't just want to sit around and donate to the market. You want to make the most of your cash. Spread it out, or just focus on 1 or 2 markets and go with it. I get the question a lot, Shane, I'm starting out. What markets should I use? What should I do? What should I trade? And I say, you know what? If I was starting all over again, brand new, the first thing I'd do, I'd say, okay, I want 4 or 5 things that aren't correlated. That's the first thing I would do. So I'd probably get a stock index. I would pick a commodity, and then I would look at a couple of currency pairs. That would probably be it. Figure out how they work and trade them. There's nothing wrong with becoming a specialist. There are many specialists out there. People have made fortunes just trading the S&P 500. People have made fortunes just trading the Euro FX futures. That realistically can be done. You just have to become a specialist. You have to learn all things that pertain to these assets and understand how the market and the price action works. If you can do that, you can succeed. You really can. Even as a discretionary trader. Nobody wants to be a discretionary trader anymore. We're going to launch some new AI shorts where I talk about AI trading. Everybody wants an AI. Everybody wants an EA bot, an expert advisor, and that's all fine. I mean, estimates from the London School of Economics say 60 to 70% of the action on U.S. stocks is AI-driven trading modules. And I go, that's great. Good for them. We see the same patterns, though. AI, human, key levels are important. Basic chart patterns are important. What do you think the AI is? Do you think the AI can't recognize an inverted hammer or a hammer? Of course it can. Of course it can. So don't think of yourself as fighting the AI. I mean, you can still trade, even if you're not an AI trader. I'm not an AI trader yet. Getting there, though. There's so many things we can do, but what you're going to want to do is just be able to adapt and flow. But the market, as far as the market changes, the only changes I've seen since this AI stuff and all the automation is just they're bigger. The markets move faster and they're bigger, but the basic crux, the process of price discovery, in my opinion, in the 5 years that we've been sitting here doing this live, I see the same things over and over and over again. And it all has to do with the basic tenets of price discovery. Something to think about there if you're interested in AI trading. We all have some new content out that can help you. Working with a few new products that Switch Markets is launching and really working on to upgrade right now. So we'll be in contact over the coming months on those things as they come online. All right, week 26, 2026. Today, No Donation Friday. What does No Donation Friday mean? It means we got to save some money. Being frugal is good in the markets. Do not donate to the markets. The markets are rich. The markets are worth trillions. You don't need to give them your $50. You don't need to give them your $500. Make sure that you get paid for your time. That's what the concept of No Donation Friday is all about. We want to preserve our momentum. If you're having a winning week, bank at least 50% of your profits going to the Friday session. No exceptions. I don't care if you're up $100. Put 50 of it in your pocket. Losing week. If it's small, trade as usual. If it's big, consider waiting until Monday to trade. If your losing week is bad, if it's a bad one, shut it down. It means things are not going well and you're getting your tail kicked. Shut it down. You're probably tired. You're probably frustrated. Shut it down. Come back Monday. Get some sleep. I don't know. You might not even have to sleep. Maybe go out and party for the weekend and just get away from it. Just blow all that bad stuff out of your system. Come back Monday ready to work and optimistic. That will help you. If you're having a big losing week and you're sitting there on a Friday going, oh, I got to have a big day today to save my trading career, you're probably already a dead duck. Take your time with this game. It's a marathon, not a sprint. I know it's a cliche, but it's the truth. It's the truth. So now that's what I would say. Big losing week. That's the number one problem that a lot of folks have is they go, man, I'm having a bad week. I got to have a big Friday. We're going to get some momentum going into next week. And they go, you know what? More than likely you're going to force your game because you're already sort of on tilt from losing all the money. Slow down. Number one lesson of trading. Slow down when you're losing. Do not speed up. Do not speed up. Neutral. Trade as usual. If you're at scratch, if you're at zero for the, you know what I mean by zero. I mean, okay, if you're a little bit negative, if you're like $5, $10 negative, maybe you're just down commissions a little bit. All right, go ahead and trade as usual. If you're up just a little bit, $20 or something, okay, fine. All right, fine. I'm not going to make you take 50% of your profits if you're up $10 for the week. Go ahead and just trade it as usual. All right, fine. Reduce leverage trading. That's another thing you can do. If you're right around scratch, it means you've won some and you've lost some. Maybe you won a bunch of them and then made a bad mistake and now you're at zero. Okay. Cut your leverage down. Have a small positive day, something that's not going to bury you financially if it goes poorly, so you can easily rebound on Monday and make back what you lost and then some. Absolutely. Cut your leverage down. That's a great way to manage your risk as well. Great way to reduce stress. And then neutral. One last time, don't trade at all. That's cool with me too. If you're going to take a day off, I mean, honestly, if you're going to take a day off during the trading week, you take Monday or you take Friday. Has nothing to do with being a hard worker. All right, let's get that straight right now. A lot of people go, well, if I miss the trading session, I'm not a hard worker. I'm not dedicated. I'm not doing my best. And I go, maybe you're not doing your best. But if you're going to take a day off, you don't take a Wednesday off. You don't take a Thursday off, and you don't take a Tuesday off. You take a Monday off, or you take a Friday off. That's what I would recommend. Friday, have a long weekend. Go have some fun. Get away from this game for a little bit. Monday, maybe take it off. Don't trade. Get in here and game plan. Get ready for the week ahead. But don't be missing Tuesday, Wednesdays, and Thursdays. Those are the days you don't want to miss. That's the guts of the trading week. That's when you're going to get your primo opportunities and get an opportunity really to hit your P&L. That's the way I see it anyways. I could be wrong. Fridays may be your best day. If they are, go for it. MOU, in danger. Let's go ahead and have a look. Let's see if there's any new headlines right here. The Strait of Hormuz, Trump said Iran violated ceasefire with drone attacks. Are there any new headlines? That's what we're looking for right now. Is there anything breaking? Anything breaking? Is Trump out there? Okay, there's the picture. He's yelling. U.S. crude falls below 70, resuming losses after attack on cargo ship near Oman. He eases pressure on Fed chairman. As inflation tops 4%. So a lot going on there, but really not much. How about our prediction markets? What could happen in Iran? Strait of Hormuz traffic, that's the big one. We want to see it return back to normal. Most people believe that it's on its way. That's why crude oil prices are down. June 30th, not really any chance it's going back to normal. Maybe by July 7th, maybe by July 15th. 89% chance by the end of the year. Now, believe it or not, this is what the markets are pricing. This is what the crude oil markets are pricing. They say, okay, are we going to be back on track by the end of the year? Looks like it, yeah. So if that's the case, then your crude oil prices are probably going to be relatively bearish for the near future. Remember, when we price crude oil, we price it according to what's coming our way, not necessarily what it is right now today. So open up by December 31st. The markets apparently are cool with that. So let's go ahead and pull up our, let's see, we're trading Augie here as well. Yeah, we're trading Augie crude. Bad month for crude, right? Bad month for the bulls. Well, this is not U.S. oil. This is August crude oil futures. Spike low right there. Spike high. Now, why would this gap still be intact on this market and not U.S. oil? It's because they're priced a little bit different. There's your gap. Right now we're printing 69.41s. This gap area right down in there is right around 66.50, 67. So that's a gap. No question. Why can there be a gap here in this futures contract and not a gap in, say, U.S. oil? Remember, we already hit this gap. We're already there. We're there, man. Why are they different? Why are the prices different? 4, 3, 2, 1. The prices are different because those futures contracts, those prices are exclusive of what you see on U.S. oil. So right now, even though you're going 69.42 on the U.S. oil CFD and on CLQ, our Augie WTI crudes, the new front month is 69.43. That is the front month contract. August is. U.S. oil is now tracking that August contract. But back here, maybe last month, maybe a couple weeks ago, it was tracking the July contract, and it was tracking the June contract and the May contract, whichever one was the front month. That's why this reflects more of a continuation chart in WTI crude. So like, let's say we wanted to show you sort of a continuation chart for crude oil. I don't trade the continuation chart just because it's not really my thing. I just don't. The volumes are what they are. I like volume on the front month, but this would be like trading your U.S. oil CFD. This would be what they call a continuation chart for WTI. And what would we be looking at? Pretty much the same type of thing that we were looking at there for your U.S. oil. Prices are a little bit different, but that 69 area, that would be the gap. Why? Because the different front month crude oil, the different front month crude oil contracts, those prices are going to be merged and reflected in this continuation contract. And it's the same with U.S. oil. If you look at U.S. oil, pretty much the same chart. That's hard to explain. It's just the way it is, though. So opening war gap, you can see we're right at that gap. That was an absolutely beautiful trade, one of the best ones we've seen in a long time. Let's go down to August now. So do I feel the same way about August crude filling this gap up? Yeah, pretty much. All gaps get filled. So we're looking at about 66.50 to the downside. That's brilliant. 78% right at $65. We have to start considering that. We really do. So that's potentially very, very nice. As far as an intraday trade goes for our new front month August WTI crude oil futures, you guys pretty much know how I like to attack. This 30-minute chart is the bread and butter for the market profile. Overnight point of control was right in this area, which is fine. The U.S. session point of control is right here, essentially encapsulating the last few hours of trade, which are right down around 69. I would love it. Point of control right there. 69.15. I'm in. I mean, if I get that later in the day, that's a trade you probably pony up a belly up to the bar and you take it. Why? Market's in rotation. Probably not going to move much of anywhere. I mean, let's think about what's happened today. Let's really think. Put your thinking caps on for a minute. What happened today? This was in jeopardy. All right, the Iranians launched a drone attack on a cargo vessel that was near Oman. Nothing happened to crude oil. Maybe right there on the open, we had a little bit of a run, about 0.5% up to about $70.58, top of value, and then crashed. If you're betting on it, you almost have to bet peace right now. It looks to me like that's going to be the way forward, and I think the markets believe that thoroughly. So if you wanted to make a trade right in here, what is our point of control? Right around 15, somewhere right in there. 16, so that would be it. That would be 16. You're looking at a buy limit. Probably would rock a 2 or a 3 lot on this. Go with the 3 lot. And go ahead, and that would be your trade. Is it a good trade? Well, I mean, it's a trade. Is it a great trade? You're probably waiting on this one for a while. Look how slow the DOM is, the depth of market. Very, very slow. Very slow. Very slow. That means that the market's quiet. So decent. I mean, as far as volumes go, this is definitely a low part of the day, low part of the volume. Low part of the volume end of the spectrum for the session. You can see how volumes have just dropped off into nothing, and that's because it's a Friday and we're in the summertime. So if I was looking to get that trade right there with a 3 lot, we're looking at buying a bump, maybe 24s. High risk? I don't know if it's high risk. I think you got a real good chance. If I could just set this thing, well, you can always go over here. Whatever. Failed to modify, whatever. That's software for you. In any case, that would be your trade. You'd be looking at somewhere right around 16, maybe up at 24s, 23s, somewhere in there potentially. Let's go with 23s. I don't want to get all fouled up waiting on 25s. So that would be a late day trade using the market profile. Is it a good trade? I think we have a real good chance of winning it. I think the real challenge you're going to have here is just getting filled, getting that market to come your way and fill you up. That'll be the toughest. As far as what we're looking at here in gold, promise sort of a look at market profile in gold. Okay, here we go. We talked a lot about this one, all right? 30-minute chart, gold. This is Augie Gold Futures. Point of control overnight. Point of control is right up here. We've broken beneath the point of control. What does that mean? It means that we're probably coming off a little bit towards the close. What do we want to do with the trade? Nothing. We talked about this being really very, very tenuous up here. And you saw it. You got a nice bounce off of the point there, but now we broke it. So what do you want to do? You want to be a buyer or a seller from the line in the sand? You probably want to be a seller from 97.2. Probably be a pretty good trade for you. But, what would that look like? Paper trader, remember everything we do here is paper trading. Somewhere right in there. There would sort of be your sell. Do you get it, though? Is it worth sitting here for the next 2 hours to try to get it? Maybe, maybe not. Hard to say, guys. Really hard to say. But that's sort of a good look at end-of-day trading. Remember, these are scalps. So if you were to take that, what's your take profit? Maybe somewhere that's not even that big. It's going to be somewhere right in there. It's going to be a tight scalp. You don't want this one to get away from you. If it breaks against you, just get out. But that would be sort of a late-day game plan for gold and crude oil. That's what I would say. As far as U.S. equities go, I think they're a real nightmare today. I think when you're looking at what's happening here, Euro USD really flat. Dow Jones Industrial US 30. This would be your YM contract. Let's go to the US 30. It's just nothing there. Very tight. If you wanted to get sort of into the tall grass and work some Fibonacci's, maybe you could for the U.S. session. Something like this. What would be a good trade? You're at 38% right now. Do we want to get in there and trade it? We could buy market right now. Buy it. What does that do for us? We took a rotational trade. No question about it. We're bouncing off of 38%. It's right at our moving average and our Bollinger midpoint. Just sort of blow this up to see exactly what we're dealing with. Should we get a bit of a bounce there? The problem with making trades like this is you're not really trending. You're in deep rotation. Where does price go in the next 5 minutes? Nobody knows. So let's say we do a 30-minute chart. Let's take it down to a 1 minute and look at our management. Okay, right now we're getting a bit of a break. We've got a green candle. We've got a red hammer that's set up right there. But is there any reason why we're going to win this trade? No. Look at it. Is there any reason we're going to make that happen? You can already see if you're a 38% trader, that's the trade you wanted right there. Bang. Hard, nice rejection of that. Then we came down a second time, and we got a beautiful rejection. And now the third time, everybody's knocking on the door the third time. Eventually, these things do give way. And right now, it's giving way. So does this pay to hold it or cut it? Cut it. You could even reverse it, and I would buy into that. But take a look at this. This is a game you don't want to play in flat markets. This is a great illustration of flat markets being really people lose money fighting trends. People lose money fighting trends, and they lose money getting over leveraged, and they lose money buying systems, black box systems from people. But they also lose money trying to trade when they shouldn't be trading. This is beyond risky. You're in the middle of a range of a US 30 that's down 0.19% on the day. The market has no direction. Friday afternoon, you've only got about another, 2 hours left of trading before the market closes. Maybe it works in your favor, and maybe it doesn't. The problem is we don't really have any protocol on where to pull our stop loss off or put our profit target. We have nothing. The only thing we did was we bought right above a key level that we think may be important. But it's an intraday key level. It's not even a key level, a daily, a weekly, or a monthly. This right here, probably the single biggest I would say the single biggest nemesis for a lot of traders is they just can't sit on their hands. There's no reason to push the button and make that trade. None. So now the trap gets even bigger, right? Now you're sitting there going, okay, I just need it to, well, maybe if I reverse my position, I can get in on the dump. Well, maybe. I mean, you could reverse and go short, and then what happens? Then the market bounces up. The bottom line is this thing does not have a direction. It is flat. If you're going to engage flat markets and you're serious about it, things like Fibonacci's, things like crossovers, forget it. What you should be looking at is maybe things like pendulum strategies. We covered those. Haven't done a pendulum for a long time. If you're trading a flat market, U.S. session right there, you want to buy down here. You want to get a bargain. You want to buy down here for, 300 points lower. You want to sell up here, 200 points higher. What's the point of doing business in here? There is none. At least if you sell up here and you buy down here, I know exactly where I have to get out down here. I know exactly where I have to get out. I can't sit here just in case we break higher and put together a big day. But in here, how do you manage this trade? It's a great example. How do you manage it? I just sit on my hands and it'll come back. It'll come back in my favor. Really, will it? Or do you put one of these prints in? Nobody's trading right now. The volume, look at the volume. The volumes have just evaporated. So that's a long way of me saying that sometimes if you know when not to trade, you can save a lot of money. And this really does dovetail with our no donation theme for Fridays. Know when not to trade. Know when not to force the game. One of the worst things that could happen for a trader that took this US 30 is to win. What if you win it? There's no real reason you're going to win it. The only reason you'd win is if more bidders show up and bid this thing. Market structure? Where's the market structure at? I don't see any market structure. I see a flat market. That's what I see. Don't give back hard-earned money on great trades. Can't justify giving back money from the big trade that we had the other day on U.S. oil. That was one that we waited and waited and waited for, and it came in and it was beautiful. You don't want to give back a bunch of that money on something like this. Why? You see, it doesn't make any sense. All these questions dovetail into your own trading. It all matches up and it complements. Either your risk management's going to complement your money management, or you're just going to be a wild trader and you're going to go for these huge 10Xers, and every now and then you're going to hit and you're going to strut around when you hit and just sort of keep your losses small. Then that means your risk appetite really complements what you're trying to do from a revenue standpoint. That's great too. But this stuff right here, thinking that this trade right here is the same as our U.S. oil trade the other day is nonsense. A trade is not a trade is not a trade. A setup is not a setup is not a setup. They are not all the same. And as soon as you get there, we talk about the 920 crossover a lot. There's premium setups on the 920, and then there's bad ones. There's ones you probably shouldn't be involved in, but then there's some of those where you're like, man, the economic events line up, the price action, the timing lines up. This is a great trade. I got a 4-hour signal and 920 looks pretty good for a position trade. We've got no economic events. This looks pretty good to me. As opposed to, I've got a 920 on a 1-minute chart, and I'm trading the NASDAQ on a 15-second chart. A trade is not a trade is not a trade. A trading day is not a trading day is not a trading day. They're not all the same. They're not all equal. You've got to be able to figure out which ones you can really make go. And if you can do that, then it just becomes a lot of fun. Knowing when to stay out. This trade right here is eating us alive. Look at this. Imagine, put yourself in that psychology. If you made 1,000, waited for weeks, hit the U.S. oil trade, you're up 1,000, and now you're down 1,400, taking an intraday trade on 38%. Guys, I speak about this stuff because I've done it. I've been there. I've had the great trades line up, hit them Tuesday, Wednesday, then showed up Friday and got drug out in the grass and just beaten senseless by a 30-minute chart that has no rhyme or reason to it. I've done it. Don't do it. Learn from my mistakes. Believe me, learn from them. Take as much as you can from them. I'm more than happy to offer up any input that I can. It's not about sitting here trading and winning money every single day. It's about understanding the psychology Man, if you only made 5 trades this week and killed it, great. That's great. Think about that. 5 trades, 3 trades, 5 trades in a week, and put together a really nice number. What were you? You weren't really under the pressure cooker. You spent a majority of your time evaluating the markets, and you left with money. That is fantastic. That's what this game's all about. It really is. Now, we are going to start talking more about EA trading and AI trading because it is important that we address that. There's a lot of successful traders out there that are using AI and EAs to automate their strategies and to knock it out of the park, and I think that's great, and I don't want to ignore that. I have quite a bit of experience in the automated strategy department, and I won't discourage anybody from doing it. I really won't, but there's a couple of things you need to understand while you do it that are going to be very, very important to make that go over any period of time at all. All right, everybody, let's see. Jason Maxim, know when to hold them, know when to fold them. That's the gambler. The gambler, Kenny Rogers. Believe it or not, I mean, that's one of the songs that I learned from. Know when to hold them, know when to fold them. A lot of people don't believe that can be done. I do. Know when to hold them, know when to fold them. Know when to walk away, know when to run. You never count your money while you're sitting at the table. Don't do it. Don't count your money during the trading day, right? Count it afterwards. Keep it on your losses. Let me see, Packup. I tried trading against the 5-8-13 EMA today and lost on the US 30 at market open. You traded against it. Got to watch that. I could see why any sort of crossover didn't function well though. If you traded US 30 5-8-13 on the open, right there. So I'm guessing you sold it. Yeah, I mean, that's the reality of it. Look at this. Now you're down about 2,300. These are demo dollars. 2,300. Absolutely nothing has happened. Trading rotational markets is difficult. All right, let's take a look at our WTI. Yeah, we're not going to get that. Thought we had an opportunity there for a second. It went down to about 29 or 25. That would have been really a beautiful trade. Nice little bump there to walk home with a few $100. And then you can see right here, we want to get this sell on this GC. You're not going to get that either. It's just getting too late in the day. It's just the way it is. Well, my apologies. You went against the mighty 5-8-13, but that's okay. All right, everybody. I'm going to go ahead and sign off for the week. It's been a real good week of live streams, a lot of engagement. A lot of you guys have reached out. Remember, if you want any help or if you want to just reach out or tell me you don't like my shirt or my hair or anything, go on over to howtotrade.com. Be sure to send me a private message. You get your free subscription. You just log in, click on my picture, say what's up, maybe wave, say hi. That's absolutely fantastic. If you're looking for a broker, of course, I mean, Switch Markets has got you covered. Remember that. We've got all sorts of tools over there. 9 EMA trading strategy. Sort of an interesting strategy. I think there's a lot of different ways to play it to make it really, really optimize what it can do. Really optimize what it can do as opposed to just playing it conventionally. But this thing really does have some potential, especially maybe on those intraday time frames. Qualify it with an RSI. It may be a position where you're waiting for pullbacks from the 9 EMA to enter. Could be really good. Could be really good. It's just that the creativity of the individual traders is really what makes strategies like that go. All right, we might just stretch this out for another second. This would be a trade that I'm interested in. WTI crude market profile. Okay, here we go. Why are we okay? The point of controls moves per 30 minutes. So right here would be our buy. So we went ahead, we bought right there. Let's go take profit right up here around 33. So essentially what we did is we bought 25s. Remember, every 30 minutes, that was my bad right there. The point of control is adjusted every 30 minutes by a 30-minute bar. So you can see as we go in to the next 30-minute stanza, that would have given us our fresh point of control, which is right around 69.25. Really like it. Let's go ahead and wait and see how this one pans out. Now, how would we get out? How would we really get out? This would be a tougher trade just because we're looking for about 1 minute, and then we're going to switch over to the 12 o'clock, 2 p.m. hour, 12 o'clock my time. Market's starting to go against us a little bit. I don't necessarily hate it too much. We haven't broken beneath that 69.25 level just yet. Now we're back up to 26, back up to 27. We should get this bounce in the next minute or so. If we don't, we could be in big, big trouble. Let's wait for the clock to roll to the 2 o'clock hour. Only about 30 minutes left in the WTI trading day. Okay, now we've got a hammer setting up. Okay, now we're talking turkey. We're getting into a decent situation here where, okay, there's our break, 13, 12. This is going to be a big period of time, the next minute or so. 8, 7, 6, 5, 4, 3, 2, 1. Okay, now we're looking for protection. Now I'm looking for protection. Where do I want to be and where don't I want to be? Okay, my stop loss, we're not going to mess around with this thing. We're going to be looking probably to get out right down there around 22. Incredibly tight trade, but we need to win the battle right now. If we win the battle right now, then we have an opportunity to walk away with a little bit of money. If not, then we're going to go ahead and just take the loss. We're not going to be around for a late day break to the bear. I'm not even remotely interested in it. If we get hit, we get hit, but that's life. Nice compression, not really much price action happening. Rotation right around 69.25. We really are just one kick higher away from getting paid here. Let me see. We're down there at 22. I like where we're at 22. If we get hit, we're going to rip the Band-Aid off and move on. This is a pretty good looking trade for us. We're looking to win 180 and risk 150. That's better than a 1-to-1. We've got a legitimate chance to hit this thing. 27. We're up above 25. Right now, the bidders are stepping in at 25. The bids are protecting 25. That's good for us. If they're not, we're gone. 24 doesn't look good. 23, 22, we're gone. The bidders are still there at 25. The bids. Now we need to see this thing run to the top side or we're toast. Looks like we're toast. 24, 25. They're still there at 25, 23, 22. We're gone. They're protecting it. They're protecting it a little bit. We got a shot here. 23, 22, 24, back up to 27. Okay, the bidders are winning at 25. Can they produce? Can they drive this market directionally? 25s, 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 25s. Let's see it. 25s. Hit it again. All right, the seller stepped in. We could be out here any second. I expect that we may be sort of a challenge here, guys. This one's a challenge. 25. Do we get the bids? 23, 23, or 22, or are we gone? We're gone. No fill right there. Okay, we're gone. We lost. 22s. We had bidders there at 25s. The point of control did not treat us very well then. Is that a big deal? And now, of course, the market breaks. Got stopped out. Market breaks against us. That's the old rule. Once you cut it off, and if it bounces in your favor, who cares? The trade's over. The bottom line is we got in there. We took a trade. We protected our chin. We weren't taking a big loss there. Can't do it on a Friday, right? But that type of trading, that's veteran trading. That's what it is. Sometimes you take a small loss. Still hasn't traded higher and got our money, and now it's moving a little bit lower from 26. 25 should have won, and it did not. All right, everybody, I'm going to go ahead and sign out for today. It's been a long stream. You guys have a fantastic weekend. We'll be back next week with a fresh lineup of live streams. I believe next Friday is going to be the first NFP, it's going to be NFP for July, so we'll have that for you live. If you have any questions at all, be sure to reach out on how to trade. And as always, trade the action well, and we'll talk soon. See ya. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're